at beavers, they'll savor and find their soul. From dusk until dawn, the battle roars on. Pav with the courage gone brings the brawn. Each fight makes them stronger, each night they survive. Through despair and laughter, they come alive. In the heart of chaos, where hope can seem slim, they find their own rhythm on a rugged whim. Sharing stories and meals, under stars so bright. Together, they conquer the endless night. When the sun starts to rise and the streets turn to gold, at beavers they rest, tales of bravery retold. Life's simple pleasures, they're all they desire. In a world so cold, it's their warmth, their fire. Oh, team venture, they're fighting tonight. In the glow of the neon, they're a dazzling sight. Zombies beware, for they're on patrol. And at beavers, they'll savor and find their soul. From dusk until dawn, the battle roars on. Pav with the courage gone brings the brawn. Each fight makes them stronger, each night they survive. Through despair and laughter, they come alive. In the heart of chaos, where hope can seem slim, they find their own rhythm on a rugged whim. Sharing stories and meals, under stars so bright. Together, they conquer the endless night.
Welcome!
Captain Pav and GONxFREAKs on the town. Dance with zombies, never feeling down. Shadows gently chase. They fight the night with a smile on their face. Team venture, hands held tight, facing endless hordes ready to fight. At beavers they retreat, enjoying all you can eat. Oh, what a treat. They dodge each zombie bite. In sync, they turn wrong into right. With wit as sharp as a silver blade, painting the town in an undead serenade. Team venture, hearts so bold, surviving chaos, tales yet untold. Under night skies they dine, at beavers where the neon signs shine. When dawn breaks, they rest their weary heads, counting blessings, never tears they shed. In a world gone mad, they find their peace. Hand in hand, their laughter does not cease. Team venture, bound by fate, facing endless hordes at the gate. Back at beavers, end of day, all you can eat in the moonlight's red.
All right. Welcome everyone to the official first episode of Team Venture Investing. Now, of course, we have some housekeeping to do. This is not financial advice. This is not financial advice. This is not financial advice for you. This is not financial advice for anyone. Nobody should ever do any of the trades that I do for any reason at all. All right, this is entertainment and educational purposes. There will be some education, but
I like
be
to
aware
learn
that this is more of a a fun thing that we're going to do. These are real money trades. Everything you see is real money. All the accounts are real money. These are real trades. But do not.
I like money.
Do not consider this financial advice. With that out of the way, let's take a look at why should you even care about any of this.
Why should I care? Maybe because I like money a lot.
Yeah, if you like money, maybe, just maybe, there's something here for you.
But I do like money.
So if we take a look here, I am currently looking at 4 different accounts that I am trading. I have it on a 3-month view. I'm going to just refresh this so you can make sure I'm not cheating or anything. 3-month view, $936,551.09. 359% increase in account. Now, if we look here, the lowest point the account was $163,000 on April 21. We're currently at $1,197,000. So $1 million improvement. Now, to be fair also, though, I will be honest, this little bump right here was a rollover. So we added 200,000. So really, this is 736,000. Still not bad, I would say. Now, we're going to look at one of the accounts. And then the reason why I'm doing any of this is not to be like, oh, yeah, look at this. Look how great everyone, blah, blah, blah. I see so many people on these different channels say all kind of crazy shit. And they get so proud about this, that, and the other thing. And they want people to pay them. They want people to pay them for levels, which should be something that literally anyone can do. And we're going to look at all that shit and fuck all these people that are trying to get your money to do some, literally give you some, oh, let me look at some trade alerts. Really? Are you stupid? And frankly, if they're so convicted, why does anyone have these kind of returns? All right, so a lot of what I'm doing is based off conviction and really hammering into the trades that are high value. Now, I'm going to look at one account, and if we get enough likes, I will go through the different accounts, and I will actually show you the full history. Because I'm sure some people are going to say, oh, what's back here? And I'm sure you'd love to know. But you're going to learn a little bit about that as we go.
Want to know?
Well, if we get enough likes, hopefully we can take a look at all that.
Okay, let's hopefully we get them.
All right, so as you can see, there's 4 different accounts. 2 of them are traditional IRAs, and 2 of them are Roth IRAs. I have a little bit of different trading style in them based on the account size, but I've really kind of dialed in how I want to trade this market over the next year or coming years. Honestly, I think it's going to be the same market for a while, and this is going to be how to trade it. Whoa, what up, Ziggy? So this account is my Roth IRA that I contributed to this year. So this is this year's money only. And we're looking from end of last year, end of December last year to now. 100% of the trades were profitable.
That's like really good.
100% of the trades were profitable. One more time. 100% of the trades were profitable. And we can see the range of anywhere up to 92% and as low as just a couple percent. But this was actually an accidental trade, so I'm going to ignore that one. As you can see, a wide variety of values, 70%, etc. When we look at this, 46 trades with an average return of 22.79%. This is 2 years of returns in the market. On a good 2 years. 100%. Now, unfortunately, the way that I trade, I can't just put 100% of the account into the trade because it takes time to build the trade position. But knowing that every trade, well, honestly, occasionally you're gonna get one that fails, and not every account has 100%. But I'm looking at this one specifically. Over 46 trades. We snipered just the most highest probability trades Okay, this is over a 6-month period, 46 trades only. This isn't trading every fucking day. This is waiting. And waiting until every single thing aligns. And then hitting, I'm all in. Right? And getting as much money into that high probability trade as possible. Okay? Because this account is triple. Right? I have almost 200, I have 192% return in 6 months. And really, you can see most of the trades were not like in the beginning. I was building the positions. So even if I trade only these 46 trades every single year, and you triple the account every year, that's way better than going in and out and in and out and in and out to all these like low probability trades, low conviction trades. Warren Buffett sat on hundreds of billions of dollars during this dip and said it wasn't good enough for him. It wasn't good. It wasn't good enough still. Wait for the good trade. Because all the money you earned and put into your account, you can fuck around with it and fiddle and faddle. Like I learned prior to this year, I was doing the fiddly faddly trading and over trading. And that's where most of my losses came from, was over trading. In this case,
What does over trading mean? What do you mean over trading?
buying and selling low probability, or like getting out of trades too early, or getting into trades too early, or
Okay.
not waiting until your conviction is solid and you know or have some reason to believe strongly. Right. This is 6 months
Right.
of trades
Well, that's
boiled down to 46. And, you know, even amongst that, you know, I would say around half of them are less than 25%. The other half are more than 25%. But the point is you wait until the trade shows itself, and then you put everything into it. Because what a lot of traders will tell you, and again, this is not financial advice. Nobody should do this. This is crazy talk. So don't believe in anything I'm saying. But what most traders will tell you is you should only risk like 1% of your account and then try and like get a 3-to-1 return on it or something. It's like, what? How many trades you got to make? And those are all like low conviction. Even if you're super high conviction and you're making like 5 times on a 1% of your account, like, oh, whoopee. Like, are you kidding me?
Yeah. You know,
Find the high
I
conviction and just ship it. If you got pocket aces pre-flop, you jam all in. What happens, happens. But more often than not, at the end, you're going to come out ahead. So now, of course, you don't want to ever get yourself into a position where you blow up your account. But you want to be in a position where you can keep building that position to maximum profit. So that's why I wanted to just start looking at these two things. If we get enough likes, I will go back and look at a much bigger time frame and all the different accounts, and you can see. But I have 2 accounts that are 100%, and
people are going to probably think that
account only has
100% is a
one
little
bad
sussy.
Oh yeah. As we can see, this one is 100%. All right. Well, now if we jump over here. This is kind of a summary of all the accounts, when the money went in, and a comparison of the return if it had just went into the S&P 500. So in the account we just looked at, the Roth account, I contributed $11,000, $4,000 when the SPY was at this price, $7,000 when it was at this price. So if I had just left it in the market, I would have gotten 7% return. And my total value on my account right now would be $11,785. The actual value of my account right now is $32,134. So I outperformed the SPY by $20,000 on this account. And instead of getting 7% returns, I got 192% returns. So I outperformed the SPY by 184%. And my account's relative value is 272%. Now, in a Roth account, this is all tax-free. I will never have to pay tax on this $20,000 or, whatever the...
Even if you take it out?
Yeah, the $21,000. Now, I'm not old enough to take this out, but I can take tax-free out $11,000, my initial $11,000, and leave the other, $21,000 at profit to just continue to grow, and I could just ignore it and let it ride in the SPY and get the SPY growth.
Mm-hmm.
But anyway, this is all tax-free, and again, outperformed by this much. And this is what, so we're going to look at some other channels, and they're going to say, oh, look how my account, I got 12%, I got 18%, I got 184%. 184%. Like, you're talking about 12%. You're so happy. These people are so happy. They made like $3,000.
I mean, if you just, on average, if you just buy stocks, like good stocks, then like over time, you're going to gain what, 10%?
Right. So this is
just by owning them.
The S&P 500 is like the benchmark everyone, if you get better than S&P 500, you are doing good. So S&P is a benchmark. So in this case,
good benchmark.
I would have got 7% return if I had just bought stocks or whatever.
Gotcha. Huh.
But instead, I got, 292, 192% return.
Yeah, it's a little different.
So,
there's a difference there.
It's very different. And
yeah.
But this is what I'm saying,
and it
doesn't take that much money, right? I put 11,000 in, and you cannot day trade really without $25,000 in your account. So this is not day trading. These are swing trades, which is like a longer term trade that are super high conviction. We wait until everything says the trade should go good, and we start a position and we keep building it to maximum value. So that's that one. Now, this one is the more interesting one I think everyone would actually care about. This is the full-on, I take some risks in this account. This one, this is way more risky. This is not 100% trades. This is like, I think 85% right now, which is still really fucking good. And if we do get enough likes, I will show the full thing here. But this account's about 85%. I contributed $520,000. If it had been just left in the S&P 500, the current market price for S&P is $613.44. This account would have grown to $595,000, which is 14% return. This is about 2 years, so about 7% both years, right? So 14. The actual value of this account right now is $860,000. And so my 14% return went to 65% return. So I outperformed the SPY by 50%, or 44% increase over what I would have had I just used the SPY. So I outperformed SPY by $265,000 on this account. This year. This is since March. Now, of course, we had kind of a crazy event. Like, this is not like something that you can probably do often. But
we might have another crazy year.
Yeah, and the crazy years, I thought for a long time these are like once in a lifetime events, but we had COVID, we had this tariff bullshit, we had the yen carry trade last year, we had there's literally always something. There's literally always something that's going to like blow up the market for a minute. And if you have cash, and that's the other thing, keeping enough cash, I think a long time ago, maybe it made sense to just buy and hold stocks. Now, I don't think it does. I think it makes sense to hold cash, wait for the market to do something stupid, buy the shit out of it, on leverage, like leveraged I sold some things that were kind of precious to me to put into the accounts because I was so convicted that every single thing, like I would have sold everything I had if I could have to put it into the market. That's how like. And remember, I hit you up. I was like, "Hey, this is like life. There's something happening right around the corner here." That's when I started looking to sell things. But if we look at the overall total of everything, all of these accounts had $603,000 contributed over all of the lifetime. It's about 2 years that I've been investing in these accounts. If I had just left it in the SPY, I'd have $692,000, which is a 14. Again, about 14, because this account is most of it. You know, just under 15% return. Instead, I got 67%. Outperformed the SPY on my totality of accounts by 52%. Every single account outperformed the SPY. 265,000. This one 4,000, but this one I couldn't get the money into it until like May. So since May, you know, I made almost $4,500. This one's also tax free, but I just couldn't get the money in there fast enough. Anyway, the current value of these accounts is a little over $1 million. So instead of just under 700,000, I have a little over $1 million. Outperformed the SPY by $315,000 roughly. So the only reason, and I don't want to run through this really very often, but the reason why I did this was just to show like, hey, there is some credibility to what I'm about to say. And when I start calling people out for their bullshit, like it's not just me being a hater. It's like literally, are you retarded? All right. Any other thoughts on this, Freaky? Does that all make sense to you?
No. But I don't understand it as well as you do.
I think the important thing is I put in 600,000.
I get some of it. I'm starting to learn. I'm so new at learning about investments that it's easy to get confused. And I'm not a numbers person by nature. So
yeah. I know that was a lot of numbers.
The more exposure I'm going to get, the more I'll learn. So it's cool. I'm absorbing.
Yeah. This was just like a little bit of credibility. Like, okay, you can trust in my criticisms because I'm not just like making shit up, right? It's like instead of 700,000, I got $1 million right now, and I think that is something that a lot of these guys are not going to be able to say. So we're going to look at a lot of things, do some reactions. Well, again, not financial advice, but
just reactions. Gotcha.
Just reactions.
Informed reactions, though. That's what the purpose of this was.
Just establishing a little bit of credibility.
Right.
All right.
Not just talking out of our butts. Or at least
you're
not.
Get rid of these for now.
I might be.
All right. Now this guy, this drives me crazy. Look how many subscribers he got. 81,000. The Stocks channel. I definitely recommend anyone subscribe to this guy. Anyone that I'm watching, anything that I pull up, definitely subscribe. But even if I'm talking shit about these guys, I watch all of them. I get perspective of different people in the market. It helps me a lot, even if I don't agree with everything, just to be aware of what they're doing. And maybe you do agree with some of these people. So definitely, if you like any of them, definitely give them, give them a like, give them subscribe. Butt talking is just farting. Yes, that is true.
It is true.
I'm not sure where that is coming into play, but if we pull up this one, I think. Nope. All right. Oh, not have it open. I lost it. All right. Well, let's pull up one of these.
It's wait, no, it's the ready to rip.
Today, the triple Qs were up 0.94%, hit another brand new all-time high. And just very quickly, I want to go back to April 10th when I said my next bold prediction is that the stock market was going to make a brand new all-time high this year. And this was...
So this guy, I like his voice for some reason. It's like kind of got some like weird sound to it. I don't know. But sometimes he kind of sounds whiny, but he's showing, right, like as the market was falling, what we call like higher lows. So here's a low, the next low is higher, the next low is higher, the next low is higher. The highs keep getting higher. So when you see this, the stock is trending up. Now, what he's trying to say is like, oh, when it was here, I called that this was going to bounce like this. It's going to bounce like this. It's going to bounce like this. He thought it was going to come down more, which I also did, and this is why I didn't make as much money as I thought I was going to. I really thought it was going to come down, and I was waiting. I kept all my money on hold. I was like, it's gonna do it, and I'm gonna fucking load up right here, and then it didn't do it. I was like, no. So I made a little bit because I did buy some here just in case, but I kept most of my account like I was waiting for it, and then it didn't do it. So anyway, you'll see he's kind of saying, oh, I called out all these things, blah, blah, blah. This is why you should listen to me. So let's see what else he says.
When a lot of people were coming out of the woodwork saying that we were just starting into a brand new bear market, we had the death cross where the 50 moving average was crossing down below the 200 moving average. And
then you'll hear a lot of these things like, oh, a death cross and like this moving average and that moving average. And you'll see, and we'll look into some of this as well. We're not going to do it today, but we'll look at some of the chart stuff as well. And it honestly is like horoscopy, where it's like, we're going to read the tea leaves and we're going to check how the stars are aligned and we're going to look at this and that. But it does work. And the reason it works is because that's what the program, like the robots are programmed to trade against, is like all this, like, effectively, like, like I said, I feel like a fucking tarot card reader when I look at this shit. Like, he has all these lines on the chart. These are the same lines that the algorithms are looking at for trading values. So they're going to trade typically to these lines. And that's why he was hoping this would come down here, because... And in fact, often what'll happen is it'll come down here just a little bit further and then rip. So it's like an undercut. So it will go just a little bit under this value and then rip. It didn't, annoyingly. And we can see, like, here it did. It went up, hit the price, and went just a little lower, and then went shoo. And I thought that's what's going to happen here too.
There was just lots of bearish sentiment and lots of very convincing arguments that the stock market...
And then you'll hear this too about like bearish and bullish sentiment. So
right, I've heard that terms.
Bearish just means you think the stock's going to go down. So if you look at like the teeth on a bear, you can think of like the canines on a bear, like pointing down. It'll form like what they call like a double top, and then the teeth are pointing down, so it's going to go down. And then bull horns point up, so
gotcha.
It forms a W, and then the stock normally goes up. So you'll have like the horns of the bull pointing this way, the bear teeth going the other way. So it just is a way to say, is the market going up or down? I had no idea what that meant when I first started trading. Like, why do people keep saying bull and bear and hawk and dove and all these like weird, like what the fuck are all these animals doing in this trade shit? It's like, is the chart going up or down? What does it need to be hawkish and dovish and bearish and this and that? And like, what is that? Where did any of that come from?
I've
Even
heard of bull and bear, not hawk and dove. Isn't that
exactly? It's like, what the heck? There might even be more. I don't know. I'm not into the lingo.
Well,
I guess,
a hawk is predatory, and a dove is more, a peaceful symbol.
Sure. Yeah, exactly.
Maybe that's what that has to correspond with, but I don't know what that has to do with numbers.
Yeah, exactly. Is it good? Is it good to be aggressive going up or down? Like, I don't know, but
I'm not sure.
Market was not going to recover from the damage that it had been through, and we were not going to see a brand new all-time high. All of those people who told you do not buy the stock market, it's too risky, it's going into a bear market, were dead ass wrong. So the reason I bring that up today is because I always teach you to follow price action, and I always teach you to block out noise. And if you listen to any single one of those people that told you that the death cross meant we were going into a nasty bear market and the top was in, you left a ton of money on the table this year, and this was a very strong V-shaped recovery from the previous all-time high. We hit that capitulation low, and we are right back up here at a brand new all-time high.
So this was like the most obvious thesis out there. Like literally every single person trading. Now, if you got down, so what happened is we hit 500 and then like overnight went down to 480. And if Trump had not announced the tariff pause, I guarantee we were going down farther. Like, I was trading all of these days, and including this day. And if he did not pause the tariffs, we were going lower. But he did. And
so there was that really big recovery there, that big blue line. Is that what that signifies, a recovery?
Yeah, this green one?
Yeah.
Yeah, so when it's green, it means the price at the beginning of the day is lower than at the end of the day. So if price went up that day. If it's red, the price started up here and ended down here.
Okay. I was trying to figure it out. I couldn't understand it.
No, and it takes a minute, so I'm happy to like talk about any of that stuff. So as we came down, when we hit 500, it was like the most obvious thing. If we turned around here, we were not coming back. Now, hitting 480 was actually kind of critical because now this is a different chart, but it's the same. To the left, there's a gap in the chart. So it filled the gap and made the chart happy. But then, if you notice, this is what a gap is. When the price like skips prices. It did it here too. It did it here too. Here's one. And typically the chart does not like that. Meaning at some point the price is going to come back down to here, and it's called filling the gap, and then the price will come back up properly to not have a gap. And the fact that this rally left so many freaking holes is the one, like, very dangerous thing to me, at least, that it could still, at some point, even though we're way up here now, it is going to come back. But when that happens, that's a freaking buying opportunity. Just like this one. It filled the last gap. Well, there's actually one way further down. But there's no way it's going down there. But this is when you buy. It hit the last gap. So when this price gets hit again, I will literally sell my house, my car. Literally, I will be on leverage to, like, anybody will give me money. It's going in. So anyway, when it hits here, that's when the big buy is. But you have a good one here as well. I think there's a chance we're going to actually come back down here at any rate.
So this is just a constant reminder from yours truly to follow the damn chart. There was plenty of evidence from the buying back here when we had that very impulsive green candle and then the higher low, higher high breakout. You should have known, even if you did not catch the bottom, that the market was trying to go higher by the end of April. And you should have caught the entire bull rally from the end of April to where we are today because the chart told you to. Now, we did.
Yep. And that is exactly true. So he is exactly right. And that's what makes me so angry about this guy. Like, he is, like, so right about so much shit, but he is a fucking idiot. And it makes me so angry. It's like he's so close, but like he can't see, like, the last piece of the puzzle is like hidden from his view for some reason. I don't know why. He just can't get over himself.
Okay.
Did catch the bottom, and it was very obvious to me that we were capitulating, and you can even go back and all the videos are there where I said we were going to get the V-shaped recovery from the capitulation.
Yeah, which was obvious. So effectively, I started buying, like, I bought a whole bunch in this area, and then I bought a whole bunch down here. So when the price came back to this line, I was profitable. And I bought. And then sold every top. Like, I got every single one of these bitches. Now this one, I actually sold early. I didn't think it was going to rip like this. So I missed a little bit of that, but I got literally every single one of these bitches.
And I was looking for brand new all-time highs, and I made that very clear. And I'm not saying you had to know that, but the chart demanded it as of the end of April.
It demanded it.
It's been very painful for people that have been fighting it and trying to call for tops and trying to call for bear market relief rallies and saying that it was just a bear market relief rally before we just continued to go lower.
And that's the scary part, is the media the media will just hammer the bad news, the fear, the everything. Stocks are going through contraction. The PEs are too high. This, that. They were given every single reason why we were going to keep going lower. And then now all of a sudden they're talking about, oh, the PEs are fine, and we're even going to go higher now, and like the multiples are going up, and this, like, literally a couple weeks ago you were talking about, oh, this makes sense, a contraction, everything's going to get price adjusted, these are the new levels, people are going to have to get used to it, to, oh, actually we're expanding and the prices are going to inflate to brand new highs of unknown proportions. It's like, what the fuck changed in 2 months? Nothing. And in fact, it's just, that's the manipulation. And if you get caught up in it, you can get scared and overtrade. And that's what I'm trying to tell you. That's where the overtrading comes in. When I bought here, I knew in a short period these would be profitable. And I was able to hold the whole time because I didn't know when this bar was going to show up. I knew it was coming because we had a false alarm over here. I knew this bar was coming, but I didn't know when. And if I sold and then this happened, my account would have been fucked. So I had high conviction that this was going to recover and in fact be profitable in a time frame that it was. And then that enabled me to buy all of these because now this was, at this point, it was obviously not going backwards.
Any one of these pivots, those bears could have scared the hell out of you, saying we were just going to make a lower high and continue back into a bear market. So all I'm trying to tell you is block out all of the noise. This is still a bull market, and it's going to remain a bull market until we enter a recession. And earnings are just way too damn strong to have any recession, even though I do.
All of the earnings were better than expected, despite everyone thinking everything was going to shit and the whole world was shut down. Everything was, and even though that was happening, it was still everybody freaking out that we're still going to go lower and that this was like a temporary relief and we're going to even go lower than this. I'm like, Jesus, people, like, and you'd have these people up on the news, these like hedge fund analysts, like all these quote unquote credentialed people, like, oh no, my oscillator says this is going lower. Man. And frankly, if you look at when this happened, when Trump first came into office, this same almost identical thing happened. He put tariff on the first time. This is almost exactly the same.
And so basically everyone freaks out, and then it's not that bad.
And they have like,
after all, okay.
goldfish
Hey,
memory. It's
okay.
like, we already did this once.
What about when the tariffs come into effect? Will this happen again? This dip?
July 9th is when they're supposed to go into effect again. Well, that's why I didn't think this was going to happen. I thought we were going to get a dip and rip. So I think the tariff bullshit is going to cause it to dip and rip. So effectively what we're waiting to see... What
does dip and rip mean? What do you mean by that? Dip and then rise real fast?
Oh, yeah. What's going to happen is people are going to get scared because Trump's going to say, oh, fuck everyone. I'm done negotiating.
Fuck China. 700% tariffs on China.
Everybody's just going to hit the sell button. Is probably going to like... I mean, it could come all the way back down here, honestly. But it could literally, like, in 2 or 3 days, just, like, puke, like, violent, and then, like, 2 or 3 days later, be right back up here. And that's what I'm, like, look at that. Like, bleh, 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 bleh. It does... And you just have to be prepared for it. And the bigger the shock, the bigger that move is going to be. And that, you know, if he globally just is like, okay, everyone's back up to 25%, it's going to go blit. And you just buy it. You buy it when it slows down. Like it'll be like, and then it'll slow down. Or in fact, what'll happen is it'll get to here and then it'll be like, beep. And it will like jump down and back up. Like it'll be like in like a 5 minute, it'll be like, boop, boop. It's so crazy. It's so crazy. But if you're there, this is where I can, and I'll show an example of this, in a second. If you're watching it when that happens, you can just make a whole bunch of money. So this happened yesterday. Stock in the morning, it went whoop way up, kind of hovered around here, and then it went bleh. And as soon as it did this, I bought a whole bunch right here. And then it went whoop. It's that fucking easy. I just watched it. I was like, it went whoop. And I was like, And then the thing was like, oh, I'm slowing down. I was like, all right, you're slowing down. Beep, beep, beep. Bought a whole bunch. Whoop. And this is significant. A $3 move. That's a $4 move. We're talking about multipliers if your contracts are short term, or like this could be a 20% move. Like this 1 hour bar.
Group.
This is 1 hour, a 20% return. Easy. Or more, depending on your contracts that you went with. But this is what you look for. And people will like overtrade and be like, oh, right here, I'm gonna try and catch a breakout, and then it goes this way, and then they sell, and then it comes back like, fuck, I should have bought, and then they buy, and then it goes down, and then it goes up, and they're like, okay, I made money, and then they sell it, and then it comes down, and then they buy it again, and then oh fuck, I lost money. Oh, I'm gonna catch the breakout. Oh fuck, it went the other way. Oh shit, I just lost all the money I made today. That's what I'm talking about with overtrading. I waited all day. I didn't do anything. I think maybe right here I bought some like really long-term contracts, like a year out, just in case this kept ripping. But I didn't sell them. I still have them. And when it did this, I was like, oh shit. I wasn't like, oh no, fuck. Let me sell everything. Right. No. This is, are you idiot? This is temporary.
Yeah, it's
buy more.
Temporary.
This is where you buy more. I don't know. So that's just an example of that.
Do you think one is likely coming very soon? We will need to see proof from the chart, because the chart will tell us we're in a recession far before the data. What I mean by that is the stock market will already be going down and pricing in the recession before you even know it's official. And we will see that in the price action on the chart, but we're just not there yet. It will come one day, and it will be a nasty bear market, because recessions are usually very nasty bear markets. And this one will be a unique situation because of all of the global debt. And that day will come. Nobody knows exactly when, but we will see it on the chart, and we will have plenty of time to react to it. So block out all that fear-mongering bullcrap noise and just continue to follow the chart. And this is exactly what we were looking for on the triple Qs with that break to the new all-time high, was that short squeeze up to about 546. And as you can see, that is exactly where we stopped today, and the biggest risk.
As you can see, that's exactly where it went to, because I'm a genius. And if you look, right, like all these lines are nice and lined up, but let's see how much money Mr. Corey made. Let's see how he's doing at the end of the day. He's going to show us how proud he is.
From that resistance would be that we come to backfill this gap. And remember, we have a ton of gaps to the downside, and those gaps will fill during the recession. And that doesn't mean we know when the recession is. It's just going to happen eventually. And all of these gaps to the downside are going to fill. So just be prepared for that. I think the easiest thing to do right here on the triple Qs is watch this level at 546. If we are going to get a rejection, I think it's going to be right here, because it's just very unlikely that we have enough buyers to take us from 546 to 556 without a higher low pullback. Now, you could say this was our higher low pullback, because it was a higher low back here on June 23rd when we did get that pivot off the higher low. But this is really just a consolidation or a sort of bull flag look. And it's not really a pullback that's going to reset greed and fear. We really.
And you'll notice as we get further into a lot of this stuff and time passes and whatever, but so much of these things are tied to politics.
Yeah,
Like
that's starting to seem more and more clear.
This is what they call a bull flag. When the price goes up like this and then it like cools down a little bit and then goes up again, that's a bull flag, meaning this is like a positive indicator in the market that it's likely to go up.
Okay.
In order to achieve this bull flag, what did they have to do? Right? It's like this is like where the conspiracy hat comes on a little bit, and it's like, oh, we had to have missiles fired and then a ceasefire, or
Right.
oh, we had to talk about someone being attacked and then the counterstrike being successful, right? It has to fit what they're trying to accomplish, and you'll see so much of the timings, like so many things line up. It's kind of crazy. And honestly, I use a lot of that as what gives me conviction, because I'm like, based on the politics, this is what they're trying to accomplish, right? And you can see it in what they need the market to do to get their objective across. It's crazy. It is literally crazy. That's literally the only reason I got into politics, was because it correlated the market so perfectly that if you're not utilizing that, you're retarded. And Corey will say, oh, the news is not important, it's all in the chart. No, you're an idiot.
They need something to cause people to want to buy back into this market, because if you just zoom out and look, the buyers have been in control since the bottom back here in April, and they're really going to start getting exhausted up here, meaning that everybody that wanted to buy into this market has already bought in, and eventually they're going to want to lock those profits, and that is just going to lead to more selling pressure. So watch 546. I'm not saying we have to pull back, but I'm definitely looking for it right here at 546. And if we do pull back, we could easily come back down to 532 to fill that gap. Now, if for any reason we're above 546, just continue to respect the bull trend, and above 546, we'll be looking for 555 to 556. If you keep it that simple, I think you'll do very well. It's just based on following price on this chart. There's no need to guess. It is a bull trend, but all bull trends still have pullbacks and higher lows along the way. So just keep that in mind as you continue to follow price here. On the S&P 500 SPY ETF, we were up.
So this is the one that I actually trade. So when I was saying all those numbers, it was actually applying to this chart, but they look almost identical because the NASDAQ makes up a third of the S&P 500. And the NASDAQ is actually leading. So NASDAQ hit its all-time high first, which is a good thing. And it's dragging the S&P up with it. So the money kind of moves around in the market between what they call different sectors. You might have technology, energy, consumer staples. You know, there's a bunch of different categories of where stocks fit into. And they'll take money from one sector, so they'll like sell one sector and buy another. And
makes sense.
You're kind of trying to figure out what are they buying and ride the wave with them, or what are they selling and get out of the way of it. And at the end of the day, all the sectors come together into the S&P 500. So that's like the composite, like the net total of all that movement. Is it positive or negative? And we know the net total was going to be positive. Like, and when I say no, it's like, again, high conviction, because we hit these certain values. It's like it can only go so low. You know? Eventually, like Apple is still worth something, you know, and Microsoft's still worth something.
Yeah.
At some point, like there is intrinsic value beyond, you know, this what's here. So anyway, we know this is going to bounce, and you just really want to be in a position like when things were down here. Is like literally any stock you wanted to own was on discount. So if you're like a stock buyer or a stock picker and you want to like just hold stocks for long term for some reason, like you had every option under the sun at this point down here. You could buy literally anything at a huge discount, and some things at a mega discount. Or you could do what I did and say, fuck it, I'm going to leverage and say everything's going up. I don't want to have to chance being wrong. In aggregate, it's gonna go up. And then I just said, fuck it. I had like $45 million on leverage or something into the S&P going up. I was like, and that's, it did. So good thing it did. But
Yeah.
how could it keep going down is kind of the point. Anyway, so what he's saying is, of course, there needs to be a pullback at some point because people are going to be scared to buy in because they know it's going to have to cool off at some point. So once it cools off, then a whole bunch of new people are going to buy, and that's what's going to cause it to go up again. And then the people that got, they call it FOMO, they didn't buy fast enough. Now they're chasing and catching the higher end and pushing it up even farther and all these things. But like I said, I actually cashed out almost everything here because I thought the pullback was coming and it just kept going. So I bought some more and I'm just like still selling it off. Like I was completely empty until like when I got here, I had almost no exposure to the market. And then this happened and I bought a whole bunch. So I do have a position now. But if this didn't happen, I wouldn't have a position right now because I'm waiting for this pullback. And I know it's going to go at least here. Please, juicy baby, come down here. Oh my God, money to be made. And big mama holla, give me some dollar. If you come down here, we might have to buy a mansion in Germany. One of those real ones with the moat. Remember that one with the moat I showed you?
Yes.
So that if we come down here, we can buy the moat castle. But that's what I'm talking about, right? That's
with Wi-Fi.
How much the market, like just moving like to here is like beyond life changing. Like if you really believe in what's going on. All right, let's see what Corey
0.78% today, and we have not yet made the brand new all-time high in SPY, but that brand new all-time high will be up there right around 617 and then 627. And again, we have that gap to fill down here right around 600. So what we could likely see in SPY is just a little bit higher to test the previous all-time high, maybe push out to 617. And then from there, again, I would be looking for that pullback back down towards 600. So just look for this. I think as we go into the holiday week, it's more likely we're going to see lower volume as people prepare for the holiday. And that low volume doesn't always...
Dude, I held back everything for this pullback. I held back so much. I was like, it's going to come down here and I'm going to make... I was planning to make around 300 grand off this pullback. I ended up only making 50 grand. But this was the $1 million. Like if this pullback happened, I would have actually hit that challenge. We would have actually hit $1 million in profit, but it didn't do it. It instead just decided to go up.
Always mean we go higher. It could just be just enough fear and panic on low volume to send us lower quickly, and that could easily take us down to SPY 600. To the upside, you have that resistance at 613 and 617, and if we get out above 617, we're looking for 627. Today, we hit a brand new all-time high, and we are now up.
So this is Corey's investing account.
20.68% year to date, and we have been at brand new all-time highs going all the way back here around April 28th. We were already breaking out to brand new all-time highs, even though the market has just now started to break out to all-time highs. This is something we have been enjoying for over 2 months now, and we are absolutely crushing this market.
Absolutely crushing this market. I love listening to him every time he says that. Absolutely crushing the market. Are you kidding me? What the fuck are you talking about? You got $3,000 profit on a $15,000. You can't. This is like. And you got 81,000. And listen to what he's about to say.
With the market up barely single digits, and we're up over 20.5%. So if you want to get this exact same performance, you can do that because this is my trade alert service where you get all of my buy and sell alerts. And every alert has the exact percent allocations that you need to be in for the TQQQ or the SQQQ. And all you need to do is simply match that percent allocation and you will get this exact same performance. This is the best way to trade along with me because you're going to be trading the exact things that I see in the market.
So he is selling a service. Do you see how much this is?
What is service?
This fucking retard made $3,000 total in his investing return. And he wants $1,500 to a yearly subscription to his trade alerts.
Okay.
And you'll see this, we'll see this across a bunch of these guys. These fucking and this is honestly one of the reasons why I decided to do this, but it makes me so angry. And especially at these values. Like, are you fucking so full of yourself? Where's your why aren't you a millionaire? If you're so fucking, you made 20 fucking tiny little baby percentages here. A whole $3,000, man. Like, you don't even have a $25,000 account to start, and you're trying to, and he got 81,000 subscribers. Again, I like to watch this guy. I think most of what he says is actually accurate, but he's a retard and doesn't know how to actually believe in his own shit and actually make some money, and then he wants to sell this trash. Anyway.
Market, and we are extremely cash heavy right now, so now is a great time to consider becoming a member, and you can find
I can't do it. All right, so anyway, that's Corey, Stocks channel. Definitely check him out. Honestly, I do like a lot of what he's doing, but he's just retarded, and I just have to call that out. This guy, I like this guy's stuff a lot, but it's hilarious because everything that he says, well, either falls into two categories. Either it makes a lot of sense, but somehow always ends up being wrong for my strategy. Like, no matter, like, I'll be, oh, what he's saying makes a lot of sense, I should rethink what I'm doing, and it's always wrong, like every single time. So whenever I get that feeling, I go with the opposite now. I'm like, okay, if he tells me something that makes me second guess myself, I'm doubling down, because I don't know why.
Consistent?
It is. It's like literally every time. And every time I've second guessed myself because of something sensible he said, I've regretted it. So It's weird. Like I said, it makes perfect sense. Or he'll say something that makes absolutely no sense, and he's just rambling like a lunatic, and I have no idea what he's saying. So let's see. And I don't know. I kind of like, anyway, some of the stuff he does.
Hit a record high with AI semiconductors leading the way, hitting all-time highs, led by NVIDIA breaking out of a year base and breaking out to all.
NVIDIA!
So NVIDIA, I'm just going to say real quick, you're welcome to anyone that has NVIDIA. As soon as I put on some covered calls, NVIDIA fucking skyrocketed to the moon, which I knew was going to happen. It always happens. I thought we were going to get a pullback. I was going to sell the calls. Nope. Straight to the moon. Fuck you guys. I think you all owe me at least a coffee or something. That's all I can say. This is because of me putting on covers on my stocks. So effectively what I did is I put a cap on the price and said if it is more or less above a certain price by the end of the year, someone can buy them from me for cheap, effectively. So I got like a little bit of premium to like lose a whole bunch of money, because this thing's probably gonna go fucking it's going to outer space.
But beneath the surface, are other areas in the market starting to lose steam? Or is there enough money in the market for a rising tide to lift all boats? Today, I'll break down the charts and catalysts, exact setups I'm looking at in tech right now. You'll see real trading examples, reading price.
So a lot of what's happening right now is around crypto. So a lot like they're talking about what's called stablecoin, where they're going to have crypto coins that are tied to U.S. stable assets so that the price doesn't go fucking crazy all the time. And then it will allow, like, you could go use your crypto at the store or something instead of your bank card. And one of the advantages is, like, you know, it clears pretty much instantly. Like, you don't have this kind of like settlement bullshit that you have with banks. So there's like a huge opportunity potentially in the crypto space, and Circle is one of them in that space, and Coinbase, Mara. There's MSTR, I think MicroStrategies, even GameStop. GameStop's buying Bitcoin, and banking on it going up effectively. So there's a lot of stuff going on with crypto right now.
Action where the smart money is flowing to, specifically at what time. I'll explain why this quarter is make or break for tech and how it could define.
And Microsoft, I hate Microsoft so much. I lost. So
I hate that they have to make me reset my passwords all the time.
Well, that too. They can't figure out authentication. Oh my god! And then there's a checkbox. Remember me for 30 days. That shit doesn't do anything.
2025. Let's get to it. Hey everybody, welcome back. 27.5% of you that watch these videos do not subscribe. Hit the subscribe button, all notifications.
So what's weird is, in fact, it's interesting. This guy's channel's pretty good, but he doesn't get recommended ever. And I watch all of his videos, and it does not show up in my feed. So
maybe it was demonetized somehow.
And like the reason he's got so many subscribers is like the only people that see him are his subscribers. I don't know what is wrong with his channel, but it doesn't even though I go out of my way to look for his videos, it won't recommend them to me. So I don't understand what exactly is going on, but if he somehow does see this, something's wrong with your channel and is not recommending correctly.
Because these videos are linked together. Let's get to it. Now, we all see exactly what's happening with the market here. We all see this monthly close that's setting up. We all see how we're above every area that we're supposed to be. I'm not going to add a lot of value by going look at the market. That's not where we're going with this. What we're going to do is we're going to dive into this. We're going to look at all the pieces that are actually making this happen on a monthly and weekly basis. And what we're going to do is we're going to go broad on the market, and then we're going to go deep. I think that this is going to help us really understand the inflows that are going to happen in this market or can happen. And that's really where I want to start. So let's jump right into it. Now, today we're going to dive macro, and then we'll go micro. So in other words, we're going to start with the bigger picture, and then we're going to go to the smaller picture. And I think that's going to help us really elevate where we are right now, because a lot of times people can't see the forest of the trees. And the good thing about right now is we have that end of month or end of really the end of the quarter level that we can.
Did that just happen? Hold on. What's on my screen then? I just had something pop up that this said it passed. Anyway, we'll come back to that. So that might be a market thing. The reason why I bought this so much, I honestly didn't want to buy anything right now, because I think if we look at 1 month, I think we're coming back down to here. Like, I think we are coming down. So buying stock is kind of stupid if I believe it's going down, right? But there's a chance that we get news like this bill passed, or like something happening this weekend that will actually cause the stock to jump up at open. So it will like open, up here somewhere.
Okay.
And I'll instantly sell the shit out of it. But the chance is high enough of that happening that it's worth the risk, especially on the big account that has money to like spare a little bit, quote unquote, like however you look at it.
Right.
Like I won't lose money. It's just, will I have to wait a month to actually see profit, or will it just jump up here tomorrow and I see a whole bunch of profit? Right? Like there's a chance. There's also a chance that it goes down and I have to buy a bunch here and then wait a month and then get profit then. But like this is the kind of trade that I wouldn't recommend for a small account or for my like high conviction account. This trade is like, there's enough, the one that I have 85%. It's like there's enough chance that I'm going to at least make money at some point in the next month or two on this, that I'm going to take it. And in fact, it could happen in the morning, because if there's some weird news, like this bill passes, because the other thing that's happening right now.
Oh, right. Yeah, things happen at night a lot too. It's true.
Yeah, and the market doesn't move over the weekend. So when it opens on Monday, like the new price could be established and it might already be higher, and I get all of that gain locked in. Now, it could go the other way and it just opens way lower and I have a whole bunch of losses, but I don't have to sell it.
Right. It's only a loss if you sell it at that time.
So That's why I talk about overtrading.
So that's where those gaps come from. It's like the market closes and something happens and everyone's all excited about it the next day and it starts higher or lower. Okay.
Right. Absolutely. So that's where those come from. And I'm hoping we get a gap up on Monday. That's really why I bought a lot of position here. I mean, I bought like $60,000 here. Now, maybe I get a 25% return in the morning. That's $15,000, pretty much holding it over the weekend. And it could go potentially, like we could have a day like this where in the morning it just goes straight up like $3 and I make another $20,000 or whatever. It's crazy. The numbers just seemed like kind of silly at some point because like I've had days that go up or down by like $200,000 and I'm just like, You just kind of look at it and you're like, oh man, numbers just move around. Like, does it mean anything? I don't know. Like, it starts to get, like, I don't know, you start to get numb to it.
You can really look at and see. But we're going to start here, and I'd rather do this on a daily, even though to me it's significant what happened on Friday. If we take a look here on Friday, we can see this 5109, and I'm going to just shrink these down for a second and focus on this one because this is your 200-day. Now, your 200-day this is stocks that are above their 200-day moving average on a percentage that are in the S&P. We all know.
So this is important too to see like what this is showing a number of stocks above their average price over the last 200 days. So take all the prices that it was for the last 200 days, average it. Are we above or below that? Because that tells you like long term, have I improved or lost money, right? And back here, well, we were like chugging higher. Most stocks were continuously making new highs. Like most of the stock market was moving up. And if the S&P 500 is a composite of all of it, you need, like if all of the stocks are moving up, then of course the S&P is going to move up. Now, what can also happen is if, let's say, only technology moves up and let's say consumer goods goes down. Well, technology makes up such a huge part of the market that it could drag the S&P up, but what they call is like the underlying health of the market is not good because most stocks are losing value, but we have a handful that are
propping everything up for the moment.
Polling exactly, but that they can only do that for so long till they fall down too. And when that happens, it gets bloody because the market was already unhealthy.
People will start getting scared because it's a false, like rise. Oh,
and now you can see kind of two different things here. This down is very what we call orderly. It's pretty much just 45-degree angle. Like it goes up and down a little bit, but it's for the most part just straight down. Over this period. It's not straight down. It's like 45-degree selling.
Right.
Over here, it went straight down.
Right.
So this is what they call institutions. Like the big money is like slowly starting to sell off every single day in preparation of they don't know what's going to happen when tariffs come, but they know they have some time to prepare. So they started way back here and like, all right, we're just going to keep selling because we don't know what's going to happen over here. So we're just going to get out of the way, sell. And then they're like, okay, this is probably good enough. And if Trump did not announce some crazy shit on this day, the market was going back up here. So they sold it down to the point and then it was going to go back up.
What was that day? What's the date on that?
This is the tariff announcement day, like April 9th or whatever it was.
It's hard to see the date at the bottom. It's kind of small.
Yeah. So the day he announced tariffs, what happened was at 4 o'clock, he was like, oh yeah, everybody, blah, blah, blah. The market got so happy because he said 10%, which was like what everyone thought best case scenario. The market went up big time.
Okay.
And then right at 4:15, when you can't trade options anymore, he showed a board that had all the craziness and
the reciprocal tariffs, right? I remember
instantly it went all the way down here, like instantly. And nobody who had options could sell. So this was all stock selling. And everybody who had stuff here was fucked, including me. And then it just kept fucking going. I mean, I had enough money still here that I bought this, and I even bought that it was going down. So I made money here, and I bought a whole bunch here, and I made money. So it's not like whatever. But I thought the market was going up, and it was. And then it didn't. So at any rate, this is what we call orderly institutional selling. This is what we call panic sell. And then
gotcha. That's why it looks all choppy and out of place.
So overnight, people just kept selling. And then when it opened up, people kept selling. Overnight, people kept selling. Opened up, people kept selling. It just kept happening until here, where it didn't happen overnight, and it went down and then recovered.
Yeah.
But it was going to keep going down. But anyway, you can kind of see the two different ways the market sells. If you see this, you just have to wait till it's over. At some point, the institutions are going to stop, and it's going to go this way. And you have plenty of time. You don't have to panic buy into this. You can wait, because when it goes this way, it's not going to jump. It's not going to be like overnight, all of a sudden, we're coming back up here. It's going to go this way. You have time to get in. You have time to find a spot, and then it's going to rip. When this happens, this is where you want to like really aggressively buy. As soon as this
the S&P is heavily weighted in
you buy every single thing that you can and let it rip, because it's gonna.
I believe right now it's 32.3, or let's just call it 33%. You can look at the holdings yourself on that. Here's what's happening. You've been in this range forever. And the question is, are you going to break out of this range or are you not? What we don't want is we don't want a divergence where we're losing the 200-day moving average and then at the same time the market's moving up. You don't want that. You don't want that to happen, because if that happens, technically speaking, you're losing the breadth of the market. That is not what you're getting. You're getting a significant close over that level, which is pretty interesting to people considering how they traded on Friday or thought about Friday's market. A lot of people were like, wow, things are coming in. No, what we're doing, and we're doing it well, is we're rotating, but the volatility is increasing, which is actually not a bad thing from a trading perspective. But from an investing standpoint, to get in your initial positions, people are finding it frustrating. And I think a lot of that has to do with some of these other levels. This is the 50, and you can see that you were up here at 78, and now you're at that 71 level. So even though you're here, you have a percentage of stocks, let's just call it 10% less from 78 to 71, that are above their 50-day moving average. Is this important? It needs to be monitored. But the most important thing is you could stay up here forever or in this range forever. What I would say is that what people need to take from this and say, well, what does this really mean? This is where I think you should go with it. I think you should look at it and say to yourself, all right, well, we were up here, and this was that area that was so important that we just couldn't break out of. And then when we got up to those highs, and we did it here as well, we would have to argue that this level is 58%. We would see that.
See, this is the kind of mumbo jumbo that I'm telling you that he sometimes just like out of nowhere just be like drawing boxes and like, oh, look at this, and then look at over here, and then of course, you know, now we're over here, and I'm like, okay.
Yeah, I wasn't quite following him either. I was like, I think I'll just let this one go. I don't know what to say.
Now this one, okay, it makes a little bit of sense because we had like more stocks, like stronger stocks here at this price level than we do here, so you can't really expect it to break out if the market was healthier back here, and it didn't. But he doesn't like do a great job of like correlating things sometimes, or this one's not that bad, but sometimes he'll just do some stuff. I'm just looking like what are you doing?
And so what we would say with that is, well, when we were up here, 58% of stocks were above their 50-day moving average. And now we would say, well, since you've been up here, we can include this, or let's not include that, and say that, well, now 71% of stocks are above their 50-day moving average. And we are at the same level, actually above it, of course, than we once were. So is the breadth of the market stronger now, or is the breadth of the market stronger here? Why is this important? Because you have a lot of people out there.
Right. So we had a stronger market here at this price. Then it got weaker, same price. Then it went through a bloodbath. All the pricing kind of reset. People that sold, sold. People that bought. And now we have a healthiest out of these three at breakout pricing. And that's what I'm telling you, the market makers are so fucking good at making things look both good and bad at the same time. I swear to God. Because we know we want this to come down. It's like it has to really to fill these gaps. But at the same time, the market itself is saying, I am Superman right now, and are you seriously gonna not be
Right now,
part
same.
of this? Right? It's like I'm about to rip, but we're also like, well, I'm about to dip.
Right.
And it's really good at going right to the exact price that it's like, it's literally could go either way. Now, obviously, when it was down here, it was no longer, hey, it could go either way. But like at these prices, it's like, okay, yeah, it could go either way. Like this one, I was like, okay, it could. I thought pretty for sure it was going to come down. Nope, that way. Okay, now we're up here.
There's a kind of a pattern though between these littler rises that are kind of the greenish color.
Yeah,
in this
see all
same
this
pattern, like the 3 to 4 to 6 greens in a row, and then they're followed by some a little bit of this, a little bit of that, and then a little bit of down red, and then back up to the green. And it's like 1, 2, 3, 4, I guess 5, 6, 7, 8, 9, 10, 11, 12, 13. If this is one of them, this is like the 13th or 14th one, because it's like just looking at the colors, there's like a pattern there. I just saw that.
And
except for
that's the thing. The
Trump
market normally goes up.
Once Trump opens his mouth, it's an open. You don't know what the fuck's going. It's like
exactly, but that's the opportunity that you wait for, right?
That stuff, yeah. When there's not that stuff, it's like a little bit of rise, a little bit of dip, a little bit of rise, a little bit overall a rise.
Exactly.
And then that super dip,
overall,
and then that super dip, and then it's all rising up again. It's like the gentle rise.
And if you notice, and you'll see a lot of this stuff too when we get into more of the chart analysis, but you can draw a line, a straight line across diagonal to all these bottoms, then it hits the top of these, because this is when it's called breaking the trend, right? It's trending up on this line at this day or whatever. It broke the trend, and normally when the trend breaks, you get one of these, like it really breaks. Then we tried to come back into the trend. It said, no, thank you. No, thank you. Try again. Market's not healthy enough. No, thank you. No, thank you. Right? But now we're back over here.
Right.
And for it to resume that trend, we're up here, right? We're probably not going to resume that trend, but and you'll see what happens. You get like kind of a decay. So even if we decay it a little bit and put the trend like down to here, that's huge still. I think we're going to end the year over this mark. So I think we're easily, there's going to be a dip. So it's not going to be a straight line up to 640, but I believe very strongly we're going to hit at least 640 this year. So that's what a lot of my trades are based off of, is this hitting at some point in this year.
And look, this can't sustain, the market's weak, the institutions are doing that. These are the same people that became war experts, that were tariff experts in April. So it's up to you to just look at objective information and say, what's going on, man? Like, what's really going on? And this is what's going on. The breadth of the market in relation to the 50-day is actually stronger now than it was previously in January. These are facts. They are irrefutable. And that's why.
And I think it can't be stated enough. You got to look at the facts, because the news is going to say all kind of crazy shit. They're going to try and scare you in every single way possible, and then all of a sudden they'll bring up some new thing, like some new market analysis thing that's been around for a million years, but no one ever used it, until all of a sudden now it's the scary thing that's going to make you sell your stocks at a bad price. It's like, holy crap. If you look at the actual technical data of the market and you're like, how healthy is the market? How are earnings? How are actual stocks performing, their actual performance? Not what the news is saying, but look at their actual performance. Are they winning or losing? And then a little bit, you have to make a decision. Like, do you think the world is going to fall apart because Donald Trump is president? Like, if you're one of these people that's like, oh, I can't possibly believe, anything good would ever happen. Well, first off, from here to here, if you had stocks, that's 25%. That's over 250%, and in my case, almost 300% return. And if you weren't part of that because you thought he was going to ruin the country and it was going to go to zero, zero comes in around July. You know what I'm saying? Like, it's like really like the country is bankrupt. No, come on.
Why I really like this a lot, because you could just look at it and go, okay, well, what's really going on? Your 20-day moving average obviously was a little higher, and then you are right here. Now, I'll tell you why this is interesting to me, because you're flipping the 50 and you haven't flipped the 20 yet on the other names. Now, why people may look at this and say, well, that's bad that we're not there yet. I look at it, and to me, it tells me that we have a long way that we could go, because you're not even over, all these names aren't even over their 20-day moving average. If you look over the 20, which is more of a
and this is the bullshit, is like everything is set up saying like this is gonna rip. But it's like, really, are we going to just go straight up? Like, is there not going to be, and it did here. Like, there was no significant anything from here to here, right? Like this, maybe a little bit, or like on this day, it did a little fiddly diddly there, but it pretty much went straight up for over a month. And even this was like not that much pullback. And now we're on like a straight line up trajectory. Are we just going? Like, really? What? We're going to just go right to 660 or something? Like, no. Where's the pullback? But the market's saying, hey, I want to keep going. I don't know. That's why I'm like, normally what happens is at the end of, like, towards the middle or end of July, the market cools off into August. And then it picks back up going into the end of the year. So I don't think I'm really going to like be heavy into stocks again until towards the end of the year. Maybe going into the 4th of July is the only last thing I'm looking at.
Right, because of the tariffs actually going into effect.
Yeah, so I think what they're going to do is use that as a scare.
And the big beautiful bill could make a difference
before
too.
The 4th, is it just like as a last like push, like, oh, look how great Trump is on the 4th, like, whoop, and then after that it's going to go
right.
So that's my current thesis, at least, is after the 4th it's gonna barf it all out into August, maybe into September, and then probably October will start being a good buy, like an all-in buy, like have the whole account bought into something by October. But we'll see how it plays out.
Mild indicator, meaning let's call it a mid versus a longer term bull kind of indicator. Leads were being defensive with their money, when growth leads were being aggressive with our money. And this all boils down to the same things that we've constantly been talking about here, which is the macro side, right? We always want to know, what's the Fed doing? What are they thinking? Well, we know that they're talking about.
Oh, yes. The other thing is the Fed is looking at cutting rates. They've been looking at it for a while, but now Trump's talking about replacing Powell, the chair of the Fed, with someone who will lower rates. And Trump keeps saying rates need to be at 1%. The projections are rates will be at like 4% or like 3.5%. But he wants to push them all the way down to 1%. That will cause stocks to go up like big time. And for a variety of reasons, but like right now, I put for every $100,000 I put into the money market, I make $11 a day. So I got $700,000 in money market. I'm making $77. I'm making $2,000 a month guaranteed, like no risk. I don't have to worry about it going down, right? Well, that's pretty good. So now I don't have incentive to take risky stock trades. But if the rate was 1%, like I'd only be making like $500 a month on $700,000. You know, not that great. At least 2,000 I can do something with. $500, you know, not really. So now I'm probably more apt to take on stock risk, which, what does that do? Now you have more people buying into the market. And what's that going to do? It's going to raise the price. So, like,
yeah, oh yeah, that's logical.
And businesses will be able to borrow money, and that normally fuels growth. So the stocks are going to perform better, and more people are buying them. So it all comes together in a like all the incentives align, and it just pushes it. And that's going to be happening. Like, you know, he officially is, I guess, getting replaced in January, but they're looking at maybe doing it sooner. If that, or if he just does it, you know, actually lowers the rates on his own, it's going to be big. So there's a lot of upside risk in the next 1 to 2 years, like the market is almost without a doubt, the market is going up. So like I put that in like a super high percentage bucket. It's just where are the pullbacks that you can make the money? Like where did it get out of line? Right? If we draw a trend here, all the way from back here, it cuts through here where it flipped. It tried to flip back and said no. And see, every time it flips,
Was it ready?
It's a very strong, right? Like it said no, and then it like really rejects. It's like, it's not like, oh, okay. It's like, no. And then it had to come all the way back up here. And for it to recover, it had to be a bar like this. It couldn't like sneak up there and just kind of quietly push through. The market doesn't do that. The market, if it needs to break a trend, it does it like this. It's like, fuck you, trend.
Deeply?
Because then when it comes back...
So that's what you're seeing is with the JAGs. It's more of a breaking... You said breaking a trend, but in the reverse, it would be
on top.
Okay. So if it was the opposite, it would be more like
this one. It's like
compensating?
It goes like... So in order for it to break the trend, it has to really break. Like here it tried, but there wasn't enough momentum to keep it going.
Gotcha.
And then it rejects. This one, it tried and kept going so strong that the pullback, it needed to pull back so far just to hit the trend again. There was enough room here that it couldn't keep going. And then it resumed above. And you'll see this over and over. This candle, hard break, and then
this is year over year. Oh, okay.
Yeah, but you'll see it on a lot of time frames. You'll see these like very pronounced trends, and when they break the trend, it's always hard. Cheers! All right.
Cheers!
Anyway, that's that guy. I like this guy, Arte Trading. The only thing I don't like about him, he's also one of these guys that you got to pay to be part of his group or whatever, but he does do like one-on-one coaching and stuff, and he is like a registered, or was like an options trader, like I don't know, he was part of like a firm or something. So to an extent, I can maybe say, okay, like he has some specialized knowledge or skills that maybe is worth paying for, and he does provide a lot more in-depth. Like when we looked at Corey, he literally just like, it's gonna pull back here and we're gonna go up here and you can clearly see if anyone tells you they're stupid, blah blah blah, and then we're going to all-time highs, and he makes $300 and wants fucking $1,500 for a subscription. Like that's bullshit, and he should be ashamed of himself. Honestly, I hope he hears this. This guy, okay, he put in the time, and he's actually given something out, so maybe. And he doesn't put ads on his, neither does Corey. But this guy only got 39,000 subscribers, and he's been growing kind of slowly. I think something's wrong with his channel.
Yeah, you mentioned that earlier.
I don't know. It's crazy.
Hopefully he can fix it. It's kind of a bummer.
This guy. First off, fuck this guy. But stocks today, Justin Karen, or I don't know how to say it, but this guy's Canadian. Pisses me the fuck off all the time. He's talking trash about America, and it makes me just so angry. But I like watching him. I didn't realize his live were members only after they're live, but every morning I watch him because he like crashes out every day on stream and like yells at people because they don't hit the like button enough.
He yells at him?
Yeah. I was hoping to look at one of his crash outs today, but it's members only at the moment. But sometimes he'll like complain in his videos too. But like he will be like, I'm sick of fucking helping you guys every day, and nobody can't even hit the fucking like button. I'm so fucking tired of being here. Maybe I won't come in anymore, and I won't help you guys anymore. Like Jesus Christ! Like the other day, he was like, what's fair for me to ask from you in exchange for a like? And someone was like, nothing. You can't like expect anything. Like he's like, oh well, I don't know if I want to help you guys anymore. Like you can't expect nothing. Either you're doing it or you're not. And if people like it, they're gonna like it. And if they don't, they're not. And if you want to just say, hey, if you like it, leave a thing, like, great. But if you want to spaz out and be a bitch about it and be like, blah, 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 blah,
yeah, it's a
blah.
little bit of a turn off.
And his voice is kind of funny. And then and then like recently he turned to like he got so upset one day, and then like the next day he came in, he's like, all right, I'm gonna do this all different, and I'm gonna have a different attitude about everything. And he closed down his site, and he's like, I don't want any of your money anymore. Fuck everybody. I hate all of you, and I just want to help you. And he was like spazzing out like so hard. And then he stopped freaking out for like a week, and I was like, no, I watch you because you spaz out.
That's why we like you.
That's why I was watching. And then he started spazzing out again recently, so I guess he was only so resolute or whatever. I don't think Asman ever
are hard to break.
Fucking spazzes out.
I agree to that.
But yeah, I don't know. This guy, anyways, we'll watch a little bit of what he says, but he normally says, warning, stocks are gonna go down. Duh, duh, duh. Like he's always like, Trump's gonna fuck everything up. Blah, blah, blah. Like, oh, it makes me so angry. All right, let's see what he has to say.
Warning. Look at what stocks are doing. Because 3 weeks ago, Moody's warned us it was getting bad. And now they're downgrading U.S. credit rating, which is bad for stocks, which means they're going lower in after hours. So is that it? Is the win now over? That's important because as we get really closer to resistance, kind of like Bitcoin did on its first test, Bitcoin on the left, S&P on the right, we have to ask ourselves whether we're going to leg up or continue to go higher. Because right now, that's a very important question. This is a post-election cycle for the U.S. president.
So even though the chart shows we're going higher,
and this W, it's really important. If we pass or fail, if we fail, it's bad. If we pass, it's good because it's going to be another stair in the staircase to go to heaven. What does that mean? All-time highs. The S&P now has its second best week of 2025. And we're even on the cusp of a new bull market. We're on the brink. That's right, Donald Trump might be the GOAT, might be the bull. And looks like we even found a reason for the dollar to go down. What did it take? You know, just the U.S. credit rating getting downgraded by the last agency. No big deal. But these battered Wall Street shorts, they refuse to admit defeat. They can't say they're wrong. So what's happening? They're feeling some pain. As of right now, I do have some new holdings, and you can see those right here.
So this guy, thealgo.com, he like built this site for trading and trade with, like, you can, well, I guess right now he's being sassy and he doesn't want any more people because he doesn't want anyone's money because he's, I don't know, upset about something, but he's not taking
but heard about something.
Yeah, he's upset. And apparently him and his developer developed this thing, and it's funny because on stream often he'll have like a problem. I feel like he'll be like, blah, 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 and he'll like have to fix something. He's like, yeah, it has bugs, blah. Okay, cool. But anyway, here's his holdings, like percentage of what he's got, and like SOXS is like short the market. Like he thinks the market's going to go down. So part of his holdings is that the market's going to down because he's a fucking retard.
Still lots of cash, but I added some stonks today and I do have a short. I will talk about those at the end of the show if there's some time. So a couple of weeks ago, like I said, Moody's was the only rating agency that currently maintained a AAA rating outlook. Now they've downgraded that. That's bad. That's what happened. Make it really simple. We had these warnings for a very long time. We have these warnings in 2023. These two guys might look familiar, and that's because they are familiar.
Need to get like YouTube Premium, I think.
The problems we have right now are the same problems we've been having for a while, right? They boost their default ratings, have to be on high alert for a downturn. What is a downturn? A recession. So here's where we were for a budget deficit. This is confusing. All right, well, we like when lines go up. Well, here's the CBO. That's the Congressional Budget Office. There's their projection. And now Moody's came out and said 134 up to 2035. Well, to our projection is correct. Oh boy, right? That's moon now. So the stuff is getting bad. I don't want to scare people, but that's what happened today. So then we're going to find out what happens with these dots because Jerome Powell's going to meet and the FOMC is going to tell us in September. So what's going to happen? 2 cents deepening? What does that mean? You're like, whoa, this is like Greek to me. It probably is. It's confusing to most people. So the most important thing here is whether the data, which is what this is going to lead to a great recession, the C word, this, that, or the other thing. Huh? Exactly. Huh. This is really important because going back here to September of last year, I kept saying that the market was hyper-focused on the first cut for it being 25 or 50. I was more worried about a big pause causing a big recession. And what we keep hearing now is pause, right? We got to wait to normalize. If we pause, it's bad. Both like pause in 2008 led to the Great Recession. That's what I showed you earlier. The data, which is this, unemployment, inflation, that's what drives the Fed. And this rising interest rate environment, that's what really gets me a little bit uneasy here. if we are actually going to do this. No one who is alive today, unless you are, wait, hold on. If you were alive and functioning in the stock market back in 1960, congratulations. You were at least 80 years old, if my math is correct.
So, like, historically, like, Fed funds rate was, like, higher than it has been since a lot of people entered trading. Like, a lot of people started trading after 2010. Just because it's easier, right? Like, it's more accessible. You can get, like, app on your phone and start trading or whatever. But these people have only ever known zero interest, really. And that was not the case before. And especially things like margin. So this came up. This was like a scare for a while. Like, you know, a lot of people use margin and they weren't really paying interest or anything on it. But now
they are.
They are. So there was like a whole thing about that and all this. Like, okay, how does this interest going to affect, like, stocks, and like, because people were leveraged before and now they're not, that's going to take money out of the market and yada yada yada. So it was like, and even like housing, I remember like the bank was like, hey, maybe you should you know, because I was looking at a line of credit, they're like, you should really just lock it in now because these rates are not going to be this, like, historically they are never this low. And I didn't, like, they had always my entire life been that low. Like, what are you talking about? Like, they're like, I didn't know any better. I was an idiot. I'm like, what do you mean they're not going to be this low? They literally have always been this low. And I thought she was just selling me. And it's like, nope, whoop. Here we are, you know. And even these levels is like, this is still technically good, I guess, relative to historically. But I don't think we'll ever really see levels like previous again, I hope. But, you know, it's just things you don't know, right? If your whole life thing is one way, and then all of a sudden it's like, oh, well, you know, if you were 80 years old, maybe you'd know better.
And Warren Buffett has. So what is he doing? Man, he's raising funds, right? Lots of treasury bills, lots and lots.
Yeah, you see how much money he had, and he did not deploy it.
The stocks are going to do good, but want those short-term bills. All right. Another thing to remember here is that the stock market is not the economy. People always remind me of that, but it's important. Americans can't afford $1,000 emergency expense. And
yeah, you hear how he said that? That's why I hate this fucker. Americans, and he made sure to make sure to point that out. Like, Americans can't afford $1,000 fucking emergency fund. Fuck you, dude.
2/3 of workers can't afford a $500 emergency expense. These numbers are high. This is what they're talking about. So it's one of the numbers going to 135. It's high, and Americans just can't afford it. $4,200. That's a lot. So that's why they're stepping back. This rising interest rate environment is going to cause issues for a lot of companies. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. Companies are going bust, like hundreds of them. Student loan borrowers are going bust, right? 9 million people are currently past due. That's a lot of people. 9.7 million student loan borrowers are past due. Yep. Why American credit card delinquencies are at a 13-year high. Yep. Record share of credit card accounts descend into debt. Yep. Delinquency rates are going up. That's the line right there. Yep. So these are zombies. Watch out. I'm going to say maybe bye-bye. Invest accordingly. We've talked about this many times now. So I encourage you to pay attention because I've also...
Now, some of this actually, you know, I don't know. It
kind of makes sense.
The politics stuff, but it's like, I think between making children like beyond retarded to the point they can't think at all for themselves and have to, because the more
you told the same thing 15 times before they understand how actually what you're saying.
Like, you got to tell them like very specifically. But I think that also breeds like a class of person that effectively you have like a robot, more or less. Like, you tell them exactly what they need to do, and that's all they know how to do is do exactly what they're told, because they have no brain beyond, okay, I was told to
repetition.
Do this, that's what I'm gonna do. You know, it's like there's no, oh, this means that, or like, don't, you know, the thing's hot on the bottom, maybe don't grab it by the bottom. Like, it shouldn't have to be said, but if it has to be said, well, maybe you're stupid enough that I can get you to just do what I tell you and you don't think about it, right? Like, maybe it's easier for them. Like, they don't have to use their brain because someone else told them exactly what they needed to do and they don't have to think about it.
Yeah.
It's crazy. But on top of that, they're also doing this kind of bullshit where, you know, you're never going to get any money. They will never have money. It's crazy. So now you have these people that can't do anything. They're never going to have any money.
Right.
And they're kind of just forced into, you know, if you want to survive, you have to do literally whatever you know, things someone happens to be willing to tell you to do and pay you for, and you'll never, because you can't think for yourself to get out of it. But I will say, I think like retirement accounts and like financial planning, they don't teach any of this shit in school. They don't teach anything, but
No, they don't. I actually did have a financial class in high school. It was just one, but at least I had
one.
that. But it was
even
like
that,
a junior.
yeah, it was like one. Exactly.
Like
and
that's
like,
kind of late
what
for me to
extent,
be
you know?
starting to learn about this stuff, and it was a basic intro.
Exactly.
Like,
What, you like,
here's
like
how to
learn
read the
how to like
newspaper
balance a
stock page.
checkbook
Like,
and
okay.
stuff, and like
Yeah,
you did
super
like the
simple
fake
stuff.
stock challenge thing or whatever. And
Exactly.
no idea
exactly.
what you're
we
doing
picked
though.
the stocks, but we didn't really buy them or anything. How would we?
Exactly.
Much would we have made if we had actually bought them?
Right. So
Yeah.
I don't know. But
I don't think they teach that at all in schools anymore.
I don't
you
think
have
they
to
do
like,
that
literally
anymore.
go into finances in college to start learning about that stuff.
And this is the single most powerful way to make money in the whole entire world. I'm
absolutely.
telling you right now. Beyond
But it's
anything.
very scary, and that's why most people don't do it. There's a risk involved. It is like
There
gambling,
is a risk.
but it's unlike gambling. The odds are not necessarily against you as they are.
I mean, you're buying and selling against other
casino.
people. I mean, technically, you're buying and selling against like large companies too. But
if there's any
also
guarantees
people.
in life, there are people who are smarter than you, and there are probably people who are dumber than you, and they're all in the stock market buying and selling at the same time. So.
And more dumb people are in the market now than were in the past. So what I'm saying,
because it's easy, because anyone can download an app now.
And people overtrade and they do this and that, and then they lose all their money, and now someone got that.
Or they
money,
don't know what
it's the
interest
person
means.
Who was more
Right.
patient, and you know, so I don't know. Again, like Warren Buffett has hundreds of billions of dollars in cash. And he said he was waiting for a good opportunity to present itself. And this fucking stock market crash happens, and he barely bought anything. So to him, that still wasn't a good enough opportunity, like somehow. And that's what I'm talking about when people overtrade.
He is really, really rich, and he's really, really old.
Well, yeah. But
so,
he's also,
he doesn't really need to do anything. He doesn't want to.
I mean, he doesn't, but he runs a company that has, you know, investors and whatever.
Investment.
And he's the chairman of the board, or was.
Yeah, I know that
recently.
too.
So, I mean, they have to, like, they need to make money, but it was like, holy crap. If he had even invested like a few $1 billion into this pullback, he would have made a few $1 billion. You know what I'm saying? Like,
right.
And it would have only been a small percentage of what he has in cash. It's like, holy moly. And let alone if he had ripped 100 billion into the market, like, can you imagine? Like, we'd already be on the moon.
Right.
He could have been slowly selling for the last 2 months and made who knows how much money. Like, Jesus, especially if he leveraged any of it. Like, holy crap. He could just fucking buy literally the whole stock market.
Also talked briefly.
It's crazy.
On, for like a 30-second clip here. How do we invest in a bear market? We have to have a plan. We have to execute the plan. We have to choose whether we're going to dollar cost average or do stock selection, or if we want the algo advantage. Very simply put.
And that's true too. This way of trading that I'm using is only possible really because it's in a retirement account. Like doing this in a brokerage account would not be profitable. So definitely if you're not in a retirement account, do not at all costs, and this is not even joking, do not by any means get involved with this type of trading in a brokerage account. In a brokerage account, your goal is to buy stocks cheap and hold them and then leverage your account into a loan. That is your best option. But if you're going in a retirement account, your best option is dollar cost average into heavily leveraged.
Let's just do this. Instead of trying to think, let's just do this. Right? How do I know that I'm right versus thinking I'm right?
Instead of
understand what I'm doing. Warren Buffett is the best ever. So investments must be rational. If you can't understand it, don't do it.
Rule number one, never lose money.
What was that? You were
Rule
talking at the same time.
Never lose money.
Gotcha.
Rule number two, never forget rule number one. Now, of course, stocks are going to go up and down. So at some point, you're going to go down. It's just a matter of don't enter into trades that are not good, right? Like, don't put yourself in a position that's not very likely to be profitable. And, I bought into Microsoft last year when it was at a really good buy spot. And then something happened. Another company released a software update that caused all of the airports to go down. So they couldn't do any flights. But it wasn't Microsoft's fault. But they more or less got the backlash from it, and their stock went straight into the toilet, and I lost a crap load of money. You can't predict that kind of shit.
Right.
That's why going with individual stocks is extremely risky, because even though Microsoft was at a fantastic buy point, some other just out of the blue event happened that tanked it. For the S&P 500 to tank, like, you have to have all the stocks that happen to. So if Microsoft went down but Tesla blew up, okay, they cancel each other out and the S&P doesn't move. Like, okay, great. Versus I lost all my money because Microsoft got blamed for something they didn't even do. You know what I'm saying? It's like, cool. So those are the types of risk that you have with these different kind of trading options. Like, when I say options, I don't mean like options trading. I mean like ways that you could trade. Like, you could trade buying and selling stocks. That's very safe, because unless Microsoft went out of business, your stocks are going to be worth something.
Right.
If you buy
There's
leveraged
intrinsic
options,
value
they
regardless.
have a date. Exactly, and those only have an intrinsic value until a certain date. And if something happens to drag it into the toilet, it's not going to recover enough if you didn't plan for the possibility of that happening. So just all these things. Like, I've tried a bunch of different ways of trading. Like I said, the couple accounts that I have are all 100% wins, because I'm not going to enter a trade that I'm not pretty much guaranteeing that it's going to go up. I have the other account, it's at 85%, because I enter a bunch of trades that, well, first off, sometimes I enter a trade for insurance and I'm expecting it to go to 0, or it's going to explode to like 10 times. So I'm willing to risk, let's say, $10,000 or $20,000 to make $100 or $200.
Gotcha.
But that's rare. But those are like some of the bigger losses in that account. But then I only have to hit one time to more than exceed all of the losses. So at any rate, that account trades differently, and that's not you got to understand your different ways and make sure that it fits your risk and what you're trying to get out of it. Like, that account, I have money that I'm okay. Like, if I lose $5,000, not a big deal. If I lose $5,000 in my account that only has 12, that's a really big deal.
Gotcha.
Right? It's just different, right? So you just have to keep all those things in mind.
Never forget rule number 1. How did he learn that? Probably by losing money. So he respects the risk. Be fearful when others are greedy. Be greedy when others are...
This one I think we missed, but it's only when the tide goes out that you learn who's been swimming naked, right? It's only when things get weird that you can see who really is in a good position or not. And I don't, frankly, like, buying stocks, I can't see it anymore. Like, I can't understand why, except in a brokerage account, then absolutely. But otherwise, just stay cash. Wait for the market to do something stupid. In the last 2 years, I've seen major trend lines break in a way that it was like, holy crap, there's no way this could break. And I see them break, I'm like, this is the point to buy. Like, this is the point that I should sell my house and put it into the market and then buy my house back next week and 2 other houses. You know what I'm saying? That's the kind of shit. And last year, my money kept getting fucked up with what account it was in, and it was like a check in the mail for literally like 5 weeks or something, like all this dumb shit, and I missed like certain opportunities. I'm not trying to make excuses, but like, I should have already made like $3 million if just money would have been in the right account at the right time. It's just like so angry. But now the money is where it needs to be, and we're going forward. But what I'm saying is, when the market does something so profound that you're like, holy crap, I never thought this was going to happen. That's when you back up the truck and say, here's everything I own. And you double or triple or 5 times it up. And then you say, oh, look at how much more I own now. Now, in that one account I showed, my biggest return was like 92%. In my other account that I trade differently, my biggest return is like 500%.
Thanks.
And that's honestly not even that big compared to some of the potential trades. But
Fearful. Price is what you pay, value is what you get. Risk comes from knowing what you're doing. Oh my goodness. Really? Wow. Rather than thinking I'm right, how do I know that I'm right? There we go. We'll leave that segment there. Here's how you do it. Step 1, 2, 3. So if you prepare for the worst and something like today happens, hey, I'm going to sleep easy.
So this guy always has these like super long plans, and in order for him to know if his plan's right, he got to wait like 2 months. He'll be like, oh, well, I don't know if this is going to happen until the end of July, so we won't know if we're going to be going up or down until the end of July. And I'm like, are you just completely fucking retarded right now? Like, your plan, you can't decide what the market's doing until the end of next month's candle closing or something? Like, that's what you need? This guy's such a retard. All right, anyway, stocks with Justin. I definitely recommend checking out his live stream. He's live every morning. He's back to spazzing out, so definitely check him out. He's fucking hilarious.
He really wants your likes.
He really wants the likes.
Ups?
And I thought he was broken for a second. Like, he was so, like, church boy for a minute. He was like, I don't even care. And he shut down his site. He's like, I'm not begging people for money anymore. Fuck all of you for not just giving me a like. He was so angry at everybody. And he'll yell at people in the stock, in the chat if they don't, like, exactly tell him, like, exactly what he's asking for. It's like, he's so... Oh, it's so crazy. Anyway, there he is. Stocks with Justin.
Justin. All right.
I think we got one more, and then that probably will wrap it up. So, Henry James, I kind of like this guy too. There's another channel. I wish I would have bookmarked it, but this guy sounds like, I don't know, like a Hindu Santa Claus, like oracle or something, like when he's talking, and he'll just, like, how he talks is so crazy. I need to find his channel again. We'll definitely look at it next time, but that's the only other channel I really want to pull in. But this guy, Henry James, this episode, he kind of like loses his shit a little bit, but I don't know, man. Like, I see these like YouTube people starting to come unglued sometimes. Like, they just can't handle, well, I don't know, maybe the same will happen to us at some point, but they can't handle like the criticism in the comments, or like, I don't know, like let's see. You'll see how he kind of melts down at some point.
Back to the channel.
They just can't handle being trolled.
Update. Hope everybody had a lovely day. And with that being said, dive into the TA. All right, guys, we'll kick off the video today with Mr. VIX over here. As we pointed out in yesterday's video, underneath 1880, we're going to be looking for a VIX crush all the way down to new lows. That means coming down and breaking.
All right, so this chart, the VIX, the volatility index, effectively, the two things why this is important, in my opinion at least, is one, when this goes up, that means the market's going down. So when we have a spike like this, that means the market went down really, really, really fast, unexpectedly. When this happens, you want to buy. Anytime we get above this line or to that line is a great buy. And you can see if we bought here, the market turned around and like went up really fast. So whenever we hit this, you want to buy. And we hit way the fuck up here at the bottom of the other thing. So obviously that was a huge buy opportunity. But earlier we hit this high back in March. And it kind of cooled down. And I thought what was going to happen, and I was waiting for it. When this happened, I thought we were going to come down here and then spike up. So I was waiting. And then when it came all the way down here, I was like, okay, it's not going to spike. And literally, then it spiked. Like, I'm like, wow, it worked all this off. Okay, I guess we're not doing it. Boop. They are so fucking good at like perfectly timing it. Like I had just given up. Like, okay, it's not gonna do it. Boop. Fuck you.
As we pointed out in yesterday's video, underneath 1880, we're going to be looking for a VIX crush all the way down to new lows. That means coming down.
Oh, the other reason why it's important is when this is up here, that means the contract's values are higher. So if you bought,
so you can leverage more. Is that what you mean?
You don't leverage more, but the same contract for like a given price at a given date will cost more to buy, or you'll get more if you're selling it than if the VIX was down here at the same price for the stock. The options would be cheaper. And so what happens is if you buy an option here, this is called a VIX crush, and you hold it to here, the value of the contract is contracting a lot because the volatility of the market went down. So it's called extrinsic value, so not the intrinsic value. The extrinsic value goes away. So the option has two components. It has intrinsic value and extrinsic value. And intrinsic value is like if the option says I can buy a stock for $100, but the stock's worth $200, then it intrinsically is worth $100 because you're getting it $100 cheaper. But if the option was $150, then it's $100 intrinsic value and $50 extrinsic value. You might get $50 extrinsic value when the VIX is up here. When it's down here, you might get 10. So a $150 option up here is only $110. Everything else same, but the VIX being down here, that contract just lost $40. Or in the converse, it gained $40 if you bought it down here and then sold it up here.
Okay.
So this is what they call a VIX crush. If you buy contracts up here and you hold them too long, they can lose a lot of their extrinsic value, meaning the move has to be so big in order for you to make any money. Like it has to be so big relative to what people are expecting, you're probably not going to make money. However, in the converse, let's say you sell a contract here, and a sell means you're offering to buy stock at a certain price, and you're willing to escrow it, and then people are going to give you a premium for that. So you'll put $30,000 into escrow, let's say, and they'll give you $3,000. Well, if you let the VIX crush it, even if the stock price doesn't move, the value of that contract went down, and you can buy it back at a lower price. So you could have sold a $100 contract here and bought it back for $50, and the stock never moved. Just the volatility went down.
Okay.
So, and a lot of this you're going to hear over and over again, and eventually, things will sink in, and you'll see how it all comes together. But that's why this thing is important. When it's high, this means you want to sell contracts because they have a lot of extrinsic value that's going to crush off. And then you can buy it back cheaper. And I've been doing this a lot with Tesla because it has these like huge drops and then it bounces back up. So when it drops, I sell a contract, I collect a huge premium. The stock only moves up a little bit, but this crushes off of it and I buy it back at a huge profit.
As we pointed out in yesterday's video, underneath 1880, we're going to be looking for a VIX crush all the way down to new lows. That means coming down and breaking 1623. When we opened today, we were still 10% away from it. As of right now, at the close, we are still 7% away from taking out that low. I do think
the other thing is when it's down here, that usually means people are buying the market a lot. They're just buying. The prices are generally going up.
That happens over the coming sessions. I don't think VIX is likely to bounce before then. And if we do end up coming down here, getting a little bounce, I think it's something that gets sold around here, around 1880, and then we end up taking out 1623. All right, so that's what we're looking on VIX. We're going to come over here, go over QQ, SPY, we'll go over the next 7 stocks, and I have some trade ideas going into tomorrow.
Pizza!
Sometimes, you could have done better.
For you. All right, so first things first, guys. We had a bull flag breakout coming today on the daily time frame. We got bought up, mean reversion off the daily 21 EMA. Boom, got the breakout today. And
now these are like this is it's called a cloud, but it tells you like our stock's more or less going up or down, and then by what magnitude. So within the cloud is like you're within a certain standard deviation, like your pricing is within a reasonable amount. When you exceed the cloud, this means you've exceeded the expected price by somewhat of a significant amount, and you can kind of expect what they call mean reversion, where it comes back towards the average price. And then you can see it tried here, it tried here, tried here. Like in one day, it like really tried to come down and failed. And then eventually it did here. Now, if it had instead of went back up, if it had gone down, then the cloud might flip. And now we have, okay, well, how far down below the average price are we going? And then it will eventually mean revert back up. But instead, it said, okay, and you'll see this a lot. It's like, okay, I went back and I touched it. Bye.
Touch, bye-bye.
Yeah, because now it's like, okay, because you'll see it back here too, right? Like, touch, bye, and then it kind of comes back, and then bye.
Gotcha.
You know? And then you get the chop, and then it goes the other way. But that's why all these points, again, all of these things, this is how the algorithms are programmed to look for these things. And this is why it happens.
This is really, I find this to be incredibly confusing. So you'll have to explain this to me in more detail.
And you'll see a lot of different examples of people
really
doing
confusing.
different things like this. But the point is, there's a lot of what they call indicators that have certain values that if the stock hits that number, something is likely to happen. Like at this point, it kept trying to come back down to that line and failing, meaning it doesn't want to go down. It really doesn't want to. When it finally touched here, it was like, okay, you got what you wanted. Fuck off. I'll be back later.
Now I'm going to go do my thing.
Yeah, I'm going to go do this, and later I'll come see you again, but fuck off for now, right? It's a bye. And if you're aware of these values, you can make decisions. Like this one, let's say you thought the same thing was going to happen over here. You're like, okay, it's going to just do bye. But now it doesn't. And it closed down here. Well, you know this is no longer good, especially when it retests here and it says nope. As soon as this fails, you know this is not a good trade anymore, and you can get out of the way. If you didn't have this indicator, how would you know?
Might not. You wouldn't know that.
Like, how would you know to look at this specific area and make a decision, right? Like, that's why all these indicators are so important and why they give such an advantage. And I can't say this enough, but algorithms do a lot of the trading, and the algorithms are programmed to these same things. And they're making so a robot is going to buy 100 million shares when this happens, or it's going to sell. And it's either going to go bye or it's going to go bye, right? Like,
right.
And in fact, you could buy it both ways. You could say, it could go either way, so I'm going to buy contracts in both directions and then close the ones that fail. And then if you did that, you'd lose a little bit of money on that direction. But in this direction, you know how much money you just made? Like hundreds of thousands or millions of dollars in this. Now, this was not predictable that it was going to do that, but just the fact that if you had done that at this point and then it did do this, okay, you just made an ass load of money. All right. Anyway, let's see what
and then
else
coming down into the open, all right, smaller time frames, we did end up having a bull flag over here on spine QQQ. All right, guys. So you did end up just breaking over pre-market high here. You did not violate pre-market low either way. You know, we were going to be watching the zone over here. This was your breakout zone. As long as you were holding there, guys, then you push back up above pre-market high. We were going to be targeting up your all-time highs. You did not hit all-time highs today. You did not get 540.81. You came within 11 cents. Because you are not hitting it today, it is extremely likely that you will be taking out that level tomorrow. We got a new all-time high on a closing basis. We did not get a new all-time high on a normal basis. Okay, so I think that comes tomorrow. I think it's very likely that it's going to happen. You know, we have an explosive looking setup here, and you know, do you just come into it and then pull back right away? I don't think so. I think maybe you got to pull back and that gets bought, and then next week we also go higher from here. Would just make more sense after, you know, this whole mess we've had with the whole tariff flash crash. All right, but you know, we've been consolidating here for two and a half weeks here. You also consolidated here for 2.5 weeks. Okay, and then you broke up from that, barely moved.
That's the thing. If you're looking at the trend, like the market is supposed to be here. Like, so even based on the trend, we're still below it. despite this like slingshot back, like the trend says we should still be up here. So we have another like 2 big beefy honky like strong man, like show me the how big are you, baby? Where's the Arnold Palmer, whoever was showing off in the shower? That's, like this guy, he's somewhere. Like we're gonna get one of these. We have to. Like you can't get back to the trend with these little guys. You have to have another one. It's just, is it before or after the pullback? And frankly, if we do pull back, you know how many of these power candles we're gonna have on the way back to the trend that's supposed to be the fuck over here? And that's where you make the ass load of money. Like, is the market gets out of whack, it's supposed to be here. The only way for it to catch up is to have these honkers show up. And to just blow this cloud away, right? Like, this one's not even touching. Now, the problem is the cloud is very strong and it pulls it back. But, again, it got the fuck away from... It's like, okay, I touched you. Bye. Bye. It's like trying so hard to just rip.
And then consolidate there for 2.5 weeks, and then boom. All right. So I think at some point this is probably going to accelerate a little bit. I think we could be on our way to 550 to 560 over the coming 1 to 2 weeks. All right. So yeah, we're finally up here, guys. That was the thumbnail yesterday. All-time highs, thumbnail and title. All-time highs incoming. Get ready. I hope you're ready. I hope you made some money today. And if you didn't, I'm gonna point out some ideas for you to make some into tomorrow. If you are having trouble in the market, if you're not killing the market, we have a hot market. So if you're not killing the market, I will help you do so. Link will be down below. You can come join me. I will be live streaming every single day, so you can see in real time how to be killing this market. I am an options trader. Just letting you know ahead of time. Doesn't mean you can't trade other things, but I'm an options trader. That's my specialty. That's what I'm good at. All right. And I'm telling you, we got a lot of hot setups going tomorrow, guys. We really do. So we're gonna cover some at the end of today's video. But let's finish going over here QQ and SPY. Okay. So let's go over what we are going to be watching tomorrow, guys. All-time highs. That's the only upside level you're watching tomorrow. 540.81 above there, guys. Just watch the psychological levels. We're talking 541, 542, 543, 545 specifically. Okay. I'm not saying you go straight up there and hit tomorrow, but typically on these all-time high breakouts, you will start to accelerate a push. All right. On a lot of them, you will do so. And especially after we pull back for so long, we spent so long consolidating over.
Yeah. See, the way to get back on the trend is you have to have either of these big ass gaps or just honker bars. Right.
Here, okay, it was just slightly moving up. Every time you got up, you pull back into that previous range, just like you got sweep. All right, you made this high, swept, pull back. You finally make it out. Okay, you make it out. Now the slums over here. What happened? You get pulled back into the slums. All right, and then boom, you finally make it out again. You get pulled back into it, and now you got your mean reversion. This is what I was saying. It's either going to happen on the daily time frame over here. It's going to happen on the weekly time frame. If we can't hold the 21 EMA there on the daily, we're probably going to get the mean reversion on the weekly. And it's going to set up a really big buying opportunity. No one believes me, but as you guys can see now, yeah, we didn't get the really big opportunity, but we did end up rocketing right off of one of 2 spots that we were pointing out here on Spine QQ. All right, so that's really all it is tomorrow, guys. Watch 540.81, and then on the downside, if you sweep 540.81 and then you somehow make it all the way back down here and you close on 535.37, then yeah, you're probably come back over here and we get a larger sell. But unless that becomes the case, guys, do not get bearish on this market. You got no reason to. And anybody who is going to be shorting an aggressive uptrend, I think you're having a bad time. I think you are consistently having a bad time. And if you don't know why you're having a bad time, I just gave you the answer. Go with the trend. And I talked on live today about how the trend is your friend until the end. I've had very expensive lessons on both the long side and the short side there. Heaviest being on the short side there. That you just don't want to be going against the trend. The surprises are going to be in the direction of the trend. And it's very clearly that we are in monthly uptrend, weekly uptrend,
I bought some
daily uptrend. I hate
insurance to the downside, thinking that it had to pull back here, and it didn't. Burned like 20 grand on it, but I was like, I mean, the nice thing is that gave me the opportunity to leverage to the upside as well, so I made money overall, but like it was a cost of 20 to make 50. Okay, but I thought for sure it was going down, and that's one of those things where I would have made a ton of money if it went down and then up. Like I'd have made like 150 grand.
It happens. All right. I gotta take the title, I guess, because people don't know how to trade. Like anybody calling me a perma-bull when we're in an aggressive uptrend on all 3 of the major time frames, I think you're stupid. I also will tell you you're stupid if you call me a perma-bull in the comments. Why? Because you are. All right. There's at a minimum you're not stupid. You're just losing your money. that's it. Which I'm gonna say. Yeah, it's very clear where the trend is right now. Okay, so anybody who is betting on the downside, just realize you are continuously betting against things. And rather than shorting when the market's pulling back, I do a really good job at identifying strength in the market. I am a break and retest, reversal trader, base breakout, range breakout, whatever you want to refer to it as. Those are my main setups. Okay, and there's always going to be setups out there every single week. I try and tell you guys about this. If you miss out, don't catch yourself chasing things.
Take a look at this chart. So this is according to our backtest.
That is the key. If you
started
miss
with
it,
$2,500 on August 5th.
For the perfect
don't do
setup.
All right, you catch yourself doing it, smack yourself back into reality. Okay, like straight up, that is a recipe for also losing money. You don't need to chase. I give you so many clean setups every single week. Even if the market is pulling back, I still give you setups with strength to focus on at the end of every single video. If you just give me the time of day here, if you just put in the work, by that I mean watch these videos. I do the work for you. You just have to, just add these to your charts, add levels to your charts, put on the alerts. Okay, if you want to join me in the Discord, you can literally just see when we're doing things in the Discord.
Now, the thing I like about this guy is I don't believe he has a pay service, and he shares everything for free. Perfect.
That's cool.
Great. What I don't like is he going on and on and on. Oh, I give you every week you get 50 to 100% plays, like setups that will return 50 to 100%. Like, okay, how are you not a multi-billionaire right now? Like, either you don't trust your own shit, or it's mixed in with a bunch of garbage that you can't distinguish the good from the bad, or you're doing the over trading, or what is your problem? If you're going to claim, like my account, I got 22% return on average on 100% of trades. I will take that all day. You're going to tell me you got 50 to 100%. What's your average? 5%? Like, do those hit like 1% of the time? Like, I don't understand. Like, I'm not, I don't think, obviously it's not that bad, but it's just, it's frustrating to me. And this is all over the place. And what are you trying to say? Like, oh, I got all da 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 da. Okay, how are you not insanely wealthy right now?
Yeah.
Or maybe you are, but I don't think so. Doesn't seem like it.
If he was this the guy that complains about not getting likes?
Every week.
No, that's Justin.
Okay.
Yeah. No, this guy, I mean, I think he does all right, but I think one of the things maybe not so great, he looks at a lot of stocks. And that's one thing I've noticed too that I think was one of my biggest mistakes. I looked at too many stocks and didn't just really focus on one or two very, very good plays. And that's what I've been focused this year. I've only really focused on the SPY, honestly. There's been some really strong plays in other names, but the trade-off of going from the SPY, which is pretty much guaranteed, to a given stock that can fuck me over like Microsoft did, I just don't see it. Like, yeah, you might get an outsized return, maybe like if you got into AVGO or something, or like Palantir when it was $8 and you just like somehow happened to have like leaps, or heaven forbid, like short term, you just thought it was going to rip and then it blew up from $8 to 140 or something, and now you just made like 80,000% return or something. You know?
What is SPY? I don't know that.
What
does that mean?
The S&P 500 is,
I know what that is.
Index, and then the SPY is the ticker for the S&P 500 fund that you can trade on the market. So the ticker is SPY and people call it SPY.
Oh, okay.
The NASDAQ is QQQ, or they call it the triple Qs.
Okay. Okay.
It's like the stock ticker.
Yeah, okay.
And
why,
NVIDIA,
whatever.
NVDA. And so yeah, they all, so it's just if the ticker happens to be like a word, they'll just, you know, say the word or whatever.
Okay.
Now the S&P 500 index is tracked by multiple funds. So like SPY is one of them. That's the one that I trade. The VOO is the Vanguard version. So Vanguard has its own like fund that tracks the S&P 500. That's, I guess, better if you're going to buy it and hold it. You want to buy that one. I trade the SPY because it's better for trading, not holding.
Okay.
It's just various reasons, but anyway, that's Henry. I definitely, overall, I like what he does. I think he could maybe be a little more exciting, or so. I don't know. Like, his videos are too long for how like flat he is overall. And then I don't know where in here, but he did have a meltdown, and he's melted down a couple times about haters in the comments. I'm actually interested. Socks.
It's probably the most replayed.
Rants. Yep. Oh, that's true. Oh, it doesn't have it.
It doesn't have one.
Oh, he's got 3,000 views. Why does it not have a most replayed section? Interesting.
It is. I thought that was automatic. Maybe it's a setting.
Yeah, I don't know. I mean, I don't see anything in his comments that are crazy. Uh-oh, you gotta pay to be in his Discord? I might be taking back the nice things I said about you, sir. Alright, I don't see
pay to win.
Why he's
That's
melting
how he
down.
does.
But that's Henry James. I think overall he's got the right opinion, but again, if you are so confident you got 50 to 100% plays every fucking week, how much money you made, man? Like, I don't know. It's crazy. Like, pick one that's high probability and let it rip. If you're getting 100%, put the whole fucking account on it. Let's go. Like, what are you talking about? This is crazy to me. Anyway, and then this one, Stocked Up. We're not going to watch one of their videos, but I do like to watch these guys as well, especially on 2 times. They're, again, a lot of times I watch people because their voice sounds either funny or whatever. And watching them on 2 times, I think, is fun. But they always say the same thing. They don't ever really say much, and then they'll be like, "Oh, my trading bot, paid 500% return or whatever." I'm like, dude, like, if your trading bot is so good all the time, like, why don't you just put $1,000 on every trade every day? You'd be a multi-billionaire right now. I don't get it. Like, I hate these shit where they're like, oh, look at all this. Like, if only you were like following our alerts, you could have 8 million% return, even though we've made $5,000 in the market this year, and our trial subscription is $50,000 a year. Like, suck it. Like, I don't fucking get it, man. Like, and I wonder how many people actually pay for it. But like Justin's channel, there'll be like some like South African fucking dude every day like talking about some other stock or another, and he's like, "Oh, Luke, you're doing such a good job lately." Like the patronizing little fuck. I swear to God, it's like, oh my God. Anyway, so that I think is the financial news. If you learned anything here today, I would say don't overtrade. Which means find extremely high probability trades with extremely high conviction and try and leverage your account as hard into those trades as possible without, of course, blowing up your account or giving risk to that. But this shit about like 1% of your account, or like, if you triple up a 1%, or like, I need to make 50 cents on a contract and then whatever, like, what are you doing? Like, wait until because what's going to happen is you're going to be getting all chopped up, make effectively nothing, and then get caught off sides, and your whole shit's gone. And then what? But if you wait until how could this have possibly happened? The whole market is completely out of whack, and you leverage the shit out of it. Now all of a sudden you're a millionaire. Like, I don't understand. Like, what do you want? You want to chop around and make nothing? Exactly. I want to be a millionaire.
I want the big money. I want the big money. I want so much money that I can swim in it.
Yeah. So let's get there.
I can take a money bath. Oh, I want a money bath.
So I had a couple goals for 4th of July. They're in the YouTube description. The first one was to 100% one of my accounts. Of course, we did that with the one I showed. We got almost 200%, like plus 200% almost. My next goal was to get my other Roth account to $100,000, because that will completely pay for my car, tax-free, along with some other things. But that's a goal. I have obviously not hit that yet. It took some annoyingly long time to get the money into that account. So hopefully by the end of the year, we can make that happen. I wanted to get the total account value to $1 million, and technically we did that, but it required a $200,000 rollover, so that doesn't really count. I had hoped the market was going to pull back more than it did to clear out that other $200,000 that I needed, but it did not. So missed out on that. I am not going to overtrade the market. Last year, I held out because I wanted to make $2,000 so I could be at a certain number I wanted to be at for certain stupid reasons that don't even matter. And then I lost my ass. The very next day, I lost $100,000 and then lost another $100,000. So I held out $2,000 to lose hundreds. Never again. It will literally never happen again. I will never, ever, ever in my life put myself in that position. It doesn't make any sense. Why I was over trading. And that's the thing. When you're trading, it's like if you're not doing something, you feel like, oh, your money's not doing something. In fact, it is. It's being smart. The smart money sitting there waiting patiently, that is what you want. The money that's smart, waiting patiently, and is not going to all of a sudden fuck you over. So anyway, I cashed out almost everything. Like I said, I bought a little bit going into the 4th of July. I do think we're going to get a rip. We're either going straight up or we're going to dip and rip. I don't see 4th of July being lower than we are right now. I'm not pushing it, though, because all of my like really, really short-term trades, like 0 dated options or like next day, usually backfire. So we'll see my chart history at some point. I don't have it on this computer, but I'm normally off by a couple days, and that is enough to completely fuck you over if you're not prepared for it. So I won't do that again either. Anyway, I do think it's either going straight up or we're going to dip and rip. I think we'll make another, I don't know. It'd be great if we can make another 100 grand by 4th. I don't think so. 50 maybe. If we dip, hallelujah, baby. And especially if we take a huge cut. I don't think it's going to happen, especially I don't see any news that's really promoting that happening. We'll see. I don't know. We'll see if we can make this happen. Hopefully by the end of the year, I can make the 1 million in profit. That's my final goal. Have an actual 1 million in profit. Outperforming, when I say profit, I mean outperforming the S&P 500. Right now, we're at like, what was it? Like 300,000 or something. So we got some time, but the more money we have, the easier it is to put it to work and make more money. So the more money we have, the more money we can make. It's a beautiful
But they say it takes money to make money.
It takes money to make money. Absolutely. I mean, you saw what happened. I drew down to 160,000 and I'm at 1.2 million now. So
that's a significant swing. Yes.
That is something. All right. Well, thanks everyone for joining us for this first edition of Team Venture Investments. We will be putting on some trades. Probably next week we'll look at how they did. I will do some review going forward. Right now, like I said, I do have some exposure to the market, but it's like 50 contracts. Ideally being closed out tomorrow if we gap up, which would be quite lovely. So wish me luck.
We shall see.
And until then, we will catch you all next time. Enjoy some smooth jazz on the way out, and I look forward to seeing you all then.
Bye-bye.
Under the moonlight, with a groan in the sight, Captain Pav and GONxFREAKs, they're ready to fly through endless hordes, one step at a time. In the zombie apocalypse, they're feeling sublime. With a swing of a bat and a flash of a blade, Team Venture moves, their courage won't fade. They laugh in the face of a world gone mad. At Peters they'll feast, there's no reason to be sad. Oh, Team Venture, they're fighting tonight. In the glow of the neon, they're a dazzling sight. Zombies beware, for they're on patrol. And at Beavers, they'll savor and find their soul. From dusk until dawn, the battle roars on. Pav with the courage, Gone brings the brawn. Each fight makes them stronger, each night they survive. Through despair and laughter, they come alive. In the heart of chaos, where hope can seem slim, they find their own rhythm on a rugged whim. Sharing stories and meals, under stars so bright. Together, they conquer the endless night. The sun starts to rise and the streets turn to gold. At Beavers they rest, tales of bravery retold. Life's simple pleasures, they're all they desire. In a world so cold, it's their warmth, their fire. Oh, Team Venture, they're fighting tonight. In the glow of the neon, they're a dazzling sight. Zombies beware, for they're on patrol. And at Beavers, they'll savor and find their soul. From dusk until dawn, the battle roars on. Pav with the courage, Gone brings the brawn. Each fight makes them stronger, each night they survive. Through despair and laughter, they come alive. In the heart of chaos, where hope can seem slim, they find their own rhythm on a rugged whim. Sharing stories and meals, under stars so bright. Together, they conquer the endless night.